Hey, what's good, YouTube? It's your boy Will coming back with another update video for today, September the 7th. I didn't make a video last week, Friday, as we were going into Labor Day weekend, so I kind of gave everybody a day off for Friday's video and then the weekend video. And then yesterday, obviously, was a holiday. But nonetheless, I hope all you guys had a great holiday and you guys are excited getting back into the market. Today is our first day of a short week. But as you guys see from the chart, on the 1-day chart, AMC had a really good green day today. We opened at 45, closed at 47.83, otherwise making us up 8.66% on some pretty hefty volume. Got back into the hundreds at 101 million shares traded today, which was up essentially double from Friday's volume, which we were at 52. So it's great to see the higher volume kicking in. If you guys did see my video last week, Thursday, I did show you guys in that video a volume pattern that's been identified. I'm showing you guys we are in days away from the next run up according to that pattern, if that pattern is still true and holds true, right? So something to be on the lookout for or look forward to. I did also mention to you guys the new rule change that did take place with the DTCC, where the margin requirement did change from 10,000 to 250,000, right? Now, there was a lot of hype and a lot of excitement, obviously, behind that rule because of what it could do or what it could mean for AMC and the position that the shorts are holding against AMC. But just because we didn't see this enormous explosion or run-up doesn't mean we won't still get that, right? Because we did still see some other evidence that showed us that the rule did have an effect, specifically on some shorts. Now, there's some other events going on in the market right now that I want you guys to take note of that I guess I physically remember because I've been in AMC since early January. So I follow the trends and patterns pretty closely so that I can easily identify them. But I'll get to that in a minute. Looking at the chart, as you guys see, we did hit this heavy area of resistance once again, as we had done in days before, and we did not break through. If we look at the lower hours, or the 4-hour, for example, they literally line up perfectly. If you look any time zone, literally any hour of the chart, 2, 1, all the candles line up perfectly, just like they have been before, right? Because again, in order for us to break through this heavy point of resistance, we're going to have some huge momentum, kind of like something like this big green candle that just shoots us through this. And once we break through, it'll be a nice run up. So it's not a bad thing. It's good to identify these points or zones of resistance because again, that's how you basically can plan and strategize against the market, right? Obviously, if you see that this heavy point of resistance and you've been rejected once, twice, or 3 times, then you know anytime it dips back, it's going to go right back up. Which means if you bought a position here, for example, on this red candle at 38, you automatically know it's going to go right back up to this 40 no matter what. You could sell at the 40, wait till it drops again, for example, here at this 42, and then enjoy that right up again. That's essentially how the fundamentals of the stock market work, right? Buy low, sell high. That's it. It's not that difficult, not that challenging. But it just takes practice, right? In other case, now that we have seen this, or now that you are looking at this chart, as some other YouTubers have alluded to, every time we get 4 attempts at this resistance or any resistance is when normally AMC breaks through. So by that math or by that estimate, we have 1, 2, and 3, meaning that on the 4th try is the 4th and final try when we should finally break through if it remains true to that pattern. But I guess that's essentially AMC as it is. Tomorrow, again, I have nothing but positive sentiment for AMC based on me holding and the patterns that I've seen, especially with the volume pattern. I expect a nice run up here within the next coming days or next coming weeks. But September should be a relatively good green month for us based on those patterns, right? So how can we get some confirmation on that? Well, the rule change that took place last week, Friday, on September 3rd, did have some effects. It just didn't have the effect we wanted on AMC. But it still had an effect, which still does teach us something. So how many of you guys ever remember of a company named Blockbuster? If you're a 90s baby or an 80s baby, you know exactly who Blockbuster is. Well, their ticker used to be BLIAQ for Blockbuster. As you see here, it's worth 1 cent, 1.7 cents essentially a share. Blockbuster did go bankrupt, as everybody knows. I think there's only 1 in the entire country or 2 that are still operational, but those are independently owned. That's not necessarily a traded stock. But you may be wondering, what the hell are you bringing up Blockbuster for? Well, Blockbuster was affected essentially by a short position that made them go bankrupt. How do I know that, or how can I validate that? Easy. So if I was a short in the late 90s, early 2000s, and I was shorting Blockbuster, and let's just say I sold 1,000,000 shares short. And let's just say in this example, Blockbuster was trading at $20 a share. Well, 1,000,000 shares at $20 a share, I made $20 million when I sold all of those shares. If the stock price goes down to zero and they go bankrupt, I don't have to buy them back. I don't have to pay anybody back because the company's out of business. So I'm off the hook, essentially, right? If I sell the position, even if it's a short position, I'm then liable to pay the tax for the 20 million that I made in this example. If I don't close the position and just leave it, I'm not liable for that tax. Makes simple economics, right? That same true, by the way, is true for anyone holding AMC now. If you bought AMC between January and now, and you sell AMC before the year's end, you're going to have to pay tax on the sale of those shares, right? You might want to consult your tax consultant for that, so they can give you best advice, especially when making investments. Because capital gains tax is not a joke. It does need to be paid, and Uncle Sam will come looking for his money, FYI. But in either case, why am I bringing up Blockbuster? Well, the rule change took place September 3rd, where we, again, previously discussed that the margin requirement would go from 10,000 to 250,000. And what do we see here in the last 5 days, specifically on September 3rd, which was Friday? We see Blockbuster making a 1,060% jump, specifically this big green candle here. As you see, Blockbuster's share price skyrocketed 1,000%. Why? Because the margin requirement changed, which tells us that the short who shorted Blockbuster never closed out their position, which means they never paid the tax on the money they made for shorting them, which also tells us that the margin rule did have an effect on shorts. That's the proof, right? It just didn't transcend into the chart for AMC the way we wanted it to, but it still had an effect. And it's not just one company. How many of you guys remember Sears? Well, Sears, again, in the last 5 days, is up 80.65% because, again, whoever shorted Sears before they went bankrupt never closed out that position, meaning that they never paid the tax for the position that they held going short against Sears. So when they went bankrupt, they just left it open. Well, when the margin requirement changed, what happened? Obviously, the price of Sears and Blockbuster both skyrocketed because those positions are still open, which means if you had, let's say, 1,000,000 shares and you were at 10,000 margin requirement, now your requirement is 250,000. It's 250,000 by those million or whatever many shares you had. It's going to affect the stock price. This is proof. Well, something else has taken place that a lot of people haven't really paid attention to, and I haven't really seen anybody else talk about, but Bitcoin. If any of you guys are into cryptocurrency or into Bitcoin, if you remember in May to June, cryptocurrencies had a sell-off, a major sell-off, right? Where it went from like the 50s, 60s, I think it was like the 60s all the way down to the 30s. Right before, specifically, the big run-up in AMC. Well, to validate that, we can go straight to our chart. AMC's buying period started specifically on May 12th. So May 12th is here. As you see, Bitcoin was trading at 57,000. On June 2nd, AMC skyrocketed, going from the 30s or the 15s to like 70s. Well, on June 2nd specifically, as you see this downtrend here, huge downtrend in Bitcoin, we went all the way down to June 2nd. This candle here, 35,797. So from 57,000 to 35,000. So essentially giving up $22,000 worth per share. Well, today, what has taken place? Cryptocurrencies had another sell-off. Bitcoin went from trading at essentially 52,500 when it opened today, going all the way down to essentially 43,561, the low of the day. It's gained back a little bit, as you see here. Cryptocurrencies run 24 hours a day, so it's trading right now at 47,000. It's gotten back a little bit of what it gave, but still, it's another sell-off. So my thing is, if it continues to sell off, that's confirmation for me, because now it happened in May, and now it's happening again now, right before our next run-up in AMC. That should only tell you that all these hedge funds have leveraged their high-risk positions in AMC, in GME, in Clove, in BBIG, basically all the meme stocks. Essentially, they have leveraged all their short positions against cryptocurrencies. which is why the chart is showing us every single time we have a major run-up, we get these huge sell-offs in crypto. And it's not just Bitcoin. Dogecoin, a lot of you guys I know like Dogecoin, is having a huge sell-off as well. Look at this huge pink candle. Again, the same exact sell-off we had back in May heading into June. Ethereum, same thing. May to early June, that major sell-off right before the big run-up in AMC, and then what do we see again? Another major sell-off. That's, to me, is indication that a lot of these hedge funds are or have leveraged essentially their positions or their high-risk positions, meaning that's where their margin is. That's what that's the value that they're using to short these other stocks. When this takes a dive, then automatically the other two go straight up into the sky. And we'll see, I guess we'll see confirmation bias of that if in the next coming days we do get another run up. Again, that is anticipated that within the next days or a couple weeks, AMC will have its next run up. As I did show you guys on Thursday's video, the volume pattern. Essentially on that pattern, we are days away from step 3, which is that big spike that we got back in January, and we're getting now back in June, and hopefully we will get now in early September. But nonetheless, we'll stay patient, we'll stay focused on the charts. Remember, always trade with your emotions in check. Don't let your emotions take control and make decisions or help you influence decisions you're making. Cool, calm, collected. That's what you need to be whenever you're trading in the market. But again, as always, guys, I'll leave it at that. If you guys have questions or concerns, leave them down in the comments below. Please don't forget to like and subscribe to the channel, as it does help with the channel's growth. And I'll catch you guys in the next one.